Welcome to the latest edition of my private network podcast, where today we will explore the future of energy and the innovations that are transforming our world. I'm your host, Bob Simpson, and in this podcast, we will delve deeply into the exciting and rapidly evolving world of clean energy and how to invest in this exciting new asset class. From solar power to wind farms, electric vehicles to smart grids, clean energy is no longer just a vision, it's becoming our reality. But what does this mean for our planet, our economies, and our daily lives? In this episode, we'll open the door for you to hear from one of the leaders in connecting clean energy opportunities with Canadian investors. Whether you're an energy enthusiast, a sustainability advocate, or just curious about clean energy and how it is shaping the world around us, this podcast is your guide to understanding the trends, technologies, and challenges that will define the next era of energy. So plug in, power up, and join us as we embark on this journey into the heart of clean energy revolution. My guest today is Rob Stein. Rob is responsible for the operational and financial performance of Skyline Energy portfolio. This includes overseeing acquisitions, dispositions, financial budgets, and implementing and monitoring capital expenditure projects and monitoring the assets' functionality. Prior to joining Skyline, Rob spent 10 years with a renewable energy contractor and developer. Hey, Rob, thanks for joining us today. How you doing?
I'm doing great. Thanks for having me, Bob. Appreciate being here.
Yep. So you're up, you said, as we were discussing this earlier, you're up north today.
Yeah, it's the start of the long weekend and the weekend before the kids go back to school. So we thought we'd start the weekend a little earlier, but still happy to talk to you, and we'll go out and play on the water later.
Yeah, no, that's great. Now, I was watching a video that from a couple of years ago, and you talked about Japan's first electric bullet train, how Warren Buffett's invested over $1 billion in solar, and how Tesla was developing a 1,000,000-mile battery. Now, I did a bit of research on that, and it looks like now they're up talking about a $4 million battery, right? Or 4 million mile
yeah.
battery, which I guess that's pretty exciting. And that means if you're mostly driving on the Don Valley Parkway, you probably get 1,000,000 miles anyway, right?
Yeah. Technology's really booming on that side of things, that's for sure.
Yeah, it's cooking. So tell us a bit about yourself, about Skyline, maybe your background. And, we're interested is how did you make the transition over to Skyline? What drove that decision?
Yeah, so I went to University of Waterloo in business and finance, and I had a couple co-op terms with a couple hedge funds. Was lucky enough to be a part of BMO's equity rotation program, where I saw different facets of trading institutional equity and sales. I thought that was what I was going to do. Had slated to go down that route, and someone I met in the public market space said, "Hey, Rob, I just bought a construction company, a development company up in Walkerton, Ontario, with the goal of really developing renewable energy across the globe." So, no, that's pretty cool. So he sent me the new Green Energy Act that the provincial government sent out at the time, said, read this over the weekend, came back on Monday, said, this is something I want to be a part of. So moved up to Walkerton on a fully 100% commission basis. And he said, start selling solar systems. And through that tender, I started really in 2008 and worked for the organization for 10 years, started as a commission sales guy and ended up running the business for the last 4 years that I was there. And I really got to see every facet of the renewable energy and construction market. So, we were developers, we built, we owned, operate, we disposed of assets, we bought of assets, we did operations and maintenance on systems. And so really, I was really lucky to have that experience in an organization that I could grow through. But by the end of 10 years, I was on the road 5 days a week. I'd leave Sunday afternoon, come back Friday night. I had a young family, and my wife's like, we got to do something different. So I had met the Skyline guys back in 2009, really saw them as an opportunity to deploy a bunch of solar on their rooftops. They had this big apartment REIT with nothing on the rooftop. Said, let's put some solar, put another revenue stream up on that rooftop and create a new revenue stream for them. So they were all keen on that. So helped them develop about 75 solar assets on their apartment buildings. And through that, got to know the founders, really liked what they were building, and just stayed in contact with them from 2009 to 2017, when I was about to make the switch out of my past organization. So I met with the CEO. He said, we'd love to build a renewable energy fund. We have this big demand from our unit holders to sort of commercialize the renewable energy space. And he said, most renewable energy that was constructed in Canada was really only for massive developers. You had to write a check for $100 million or $200 million to get involved, but it wasn't for Mrs. and Mr. Main Street. And so really with Skyline investors, we were really looking to, commercialize this renewable opportunity for our unit holders and start a fund around it. So 2018 made the transition to Skyline. And really, that was the start of the Skyline Clean Energy Fund that was really complementary to the other REITs.
Yeah, so you've kind of touched on that, but one of the first things that we like to take a look at is why should somebody choose Skyline as their investment partner if they're looking at getting into clean energy?
Yeah, we're quite unique in the sense that, if you want to get into clean energy, you can invest in a couple, pretty good publicly traded companies out there, but they're very much dependent on the market and the next big project they're building overseas. So there's a lot of volatility to their unit value. With us, we're buying the same quality of assets, these commercial grade assets. We understand what the underlying value of those assets are. We have steady unit value growth. And if there's a big shift in the market, we're not seeing a big depression in our unit value. Our unit value is based on potential cash flow. And so, as we continue to generate cash on these assets, our unit value continue to increase. And so where Skyline is a really good fit is, retail and Class F investors really can get involved in our product. They can buy our product. We're buying the same institutional quality assets. And, there's a lot of stability in our cash flows. We have government-backed contracts. We have consistent cash flows. And, we see really steady unit value growth, which fits really well into a lot of people's portfolios. So, Skyline as a whole, really the mantra was buy in markets we understand. We're usually in secondary and tertiary markets, our backyard, where we have apartment buildings and retail buildings. We also want energy infrastructure because it's essential to providing the energy for that infrastructure. And so buy in the markets we understand, operate them really good, get guys like me that are boots on the ground, have constructed projects, know what quality projects look like, and really operate them as efficiently as possible. And you're really packaged up into a nice bow where our investors can invest and really benefit from the fruits of those assets generating.
Yeah. One of the things that we like about the private space is the reduced volatility for investors. We've seen that in a lot of the REITs where you could compare a private where it's a nice smooth ride where, in COVID, some of the public REITs dropped 35, 40%. They're exactly the same thing, but the price dropped 35 or 40, which is great if you're an investor getting in at negative 35 or 40, but it's tougher if you bought it and then watch it drop 35 or 40.
Oh yeah. Our CFO always says, what our investors do is focus the next morning on reading the sports section or any other thing, but the finance section. Because your investment is when you went to sleep that night before is solid. That's important to us to know we can sleep at night. We've invested in quality assets that still have the same value the next morning.
And you may, for a while, you may go through and look at it every day for the first 3 months and say, but the price only goes up a little bit every day or every month. And it's pretty steady.
Yeah. Yeah, for sure.
So Rob, just tell me a bit more about the fund. Let's dig into how's the fund constructed? What are the goals of the fund? What kind of distributions and things would investors look at there?
Appreciate it. Yeah, when we set up the fund, to your point there, we wanted a really stable and consistent product for our unit holders. We didn't want the volatility. So we really based it around an equity growth fund that we really focused on cash flows. But instead of distributing those cash flows, reinvest those cash flows into new opportunities. And this has this accretive, compounding effect to our unit value, which we're really comfortable with. We have the product that's underlying value is in its contract itself. So we have our average maturity to term on our contracts about 12 years. These contracts are all backed with creditworthy counterparts like the provincial government of Ontario or Fortis, gas producers, things like that. And the benefit with that is, we have the equity-like returns without the volatility of the public markets. So we have these really stable cash flows, which is really important for us. And, with sustainable infrastructure, we really want to make sure that we're surfacing as much value as possible for our unit holders. So we might buy an asset that has been around for 8 years or 10 years on a fixed contract. We like knowing that what the operating history of that asset is. Oh, how did it perform? What was the capital expenditures? What was the operations and maintenance of that asset? And so when we underwrite it, we're not buying something new saying, let's try and figure this out. we're buying an operating asset saying, now we can really utilize Skyline's value of having this $8 billion or $9 billion organization with shared services to say, how do we maximize the value? So we renegotiate insurance, and oftentimes we pool our insurance. So we get really great insurance rates because we're connected to the REITs. We look at, reduced costs for operations and maintenance companies. And we go and really look at the underlying costs and try and make them as efficient as possible. Then all we have to do is look at the assets and really go and put great debt on them. And so we go to all of the major banks in Canada. We said, this is a pool of renewable energy assets. This is the length left on the term, on the contract. What will you term it out? So most of our debt is coterminous with our contracts with the provincial government, less 6 months. And so we can really set debt and forget it. Our average, contract length is 12 years. Our average debt is just under 5%. And that's fixed for the life of the asset. So really what we then do is we put our operating hat back on and say, all we have to really do is make sure those assets are up and running when the sun's shining and our value gas producer is producing gas when we're able to. And so really just focuses all on operations. How do we refine operations? How do we improve those assets with better technology? And how do we maximize the generation? So really, we built a fund around that. It's an equity growth fund. It makes, quarterly we revalue the units, and we see steady cash flows. We see consistent returns, and our assets are really, set and forget them for the long term, quite passive assets.
Yeah, it sounds a lot. One of the things that investors on private debt and equity has liked is the idea of music royalties. This sounds pretty much the same thing, right? Go buy a music title. Yes. And then just take the cash flows. There's not a lot of operational risk or involvement in that, right?
No, exactly. Yeah, we're not collecting checks. We're just operating the assets, and if the sun's shining, we want to make sure those assets are up when the sun's shining. It's as simple as that.
Yeah, and investors today, a lot of investors are looking for that long-term stable growth. So I like the idea of what you're doing there. Now, where are we in the transition of clean energy? In the one video I watched on your website, you talked a lot about the grids and how they're changing and that sort of thing. Just go deep with us on what we're really seeing in the world today in clean energy.
Yeah, I'm careful when I get to answer that question not to greenwash stuff, because it's easy to say we're doing this just for sustainability and our carbon initiatives. We're not. We're doing this to make a really good return for our unit holders. Our product happens to be a renewable product. So it checks that box immediately. It's a sustainable product that fits in a lot of people's portfolios, but we're doing it largely for a return. But we're in this energy transition. It's happening right now. You see how many, electric vehicles are on the roads right now. You're seeing, this need for, more and more energy. The industry is just consuming more and more and more. And our infrastructure isn't keeping up with it, right? We add 500,000 new immigrants every year. They need places to live. But they also need the energy to power, the industries that allow this growth in population. And so this everyone talks about this housing crisis, but it's also an energy crisis we're going through. So what we're seeing in this energy transition is most governments have come and said, we know we have to reduce our emissions worldwide, right? We love this planet. We want this planet to continue to be here. So we got to reduce our emissions. So we want to be net zero by 2050. That's a 2050. That's a really lofty goal. And that's serious emission reduction in that period of time. I'm not sure we'll get there, but we're working really hard to do that. Where we see the real transition to clean energy is we need more power in this country. And so, can you go and build a coal facility or in addition to a nuclear facility, or do you expand on clean energy? And the goal with clean energy is it's the cheapest form of power out there today. We can build a brand new solar system with battery energy storage for less than 7.5 cents a kilowatt hour. Right now, to have your lights on in your office there, you're probably between 12 and 18 cents a kilowatt hour. So we're drastically reducing the cost of power, which is great. So as we need to add more and more power, let's not do it with, high carbon emission power. Let's do it with low carbon power, because it's also the most cost-effective way to do it. So really, this expansion is happening. We're seeing government regulations changing to adopt clean energy. We're seeing corporate strategies adopt to add more sustainability initiatives and clean energy to it. And really, there's just all centered around this need to reduce our carbon footprint. And one, we need more power. Let's do that in the most cost-effective way and the most energy-efficient way, and that's all through clean energy. So we're riding this wave right now, and it's pretty exciting. Clean energy is the most adopted energy source in the world right now. There's more, solar and wind and water power generation being built than any of the other forms combined. And so it's really quite an awesome place to be. And we're really lucky to have the fund at this time because there's just a ton of opportunity for growth in our fund.
Yeah, and clean energy is really more of a local strategy too, versus building a massive solar or energy producing plant, right? Like building a water
Yeah.
plant, building an atomic plant.
Yeah.
That's just not the way of the future. The way of the future is to do it locally.
No, you're right. We're in Ontario, so half of our power comes from 3 nuclear facilities in Ontario. Half of the power comes from that, but it's highly subsidized. The Canadian government or the Ontario government spends about $6 billion subsidizing our power in Ontario alone. Mm-hmm. And so, the original thought process when we're building out infrastructure, electrical infrastructure in Ontario was build these massive facilities that were all over Ontario and then distribute the power. That's an old, antiquated way to do it. You need to build the power where the power is being consumed. And so it's this decentralized model. Mm-hmm. Don't have a nuclear facility up in, Bruce on the Lake Huron and then send power, 200 kilometers to Milton. Don't do that. That's inefficient. Yep. It's going to be billions of dollars just for poles and wires. Build those power generators where the power is being consumed. So you're seeing more and more of that. If you ever drive on the 401 through Milton, there's a big building on stilts, and it's actually a natural gas peaker plant. And the goal of that peaker plant is when everyone gets home from work and wants to cook dinner and do their laundry and turn on the TVs, yep. There's this massive surge of power need. And so this peaker plant runs for about 7 hours a day. It ramps up for 4 hours because it's really a lot of heat that comes out of it. It operates for an hour of peak load, and then it ramps down for 3 hours. What an inefficient way to generate mm-hmm. power. And so, you're seeing more of this, but you're seeing that in our backyard. You're seeing that natural gas peaker plant in Milton, where that power is being, that population's growing. So big fan on decentralized power and build the power where it's being consumed. That's why it's great. We put them on rooftops of our industrial buildings. We build them in farmers' fields really close to cities that we're providing. So you're really seeing this change, this shift from, centralized power to decentralized power, which is going to reduce the cost of power, reduce the cost of transmission for everyone. And you get rid of all these old, antiquated pole and line centralized locations, which we're a big fan of.
Yeah. I was driving back from Lake Placid in August, and they have these massive farms that have just been turned into solar, right? Instead of rows yes. of peaches, you've got rows of solar in there.
Yes. Yeah. We're seeing more, big commercial sites for solar really strategically located to where they need power. So, if you drive out to Leamington Way, they have a huge power demand out there. So they have, tenders out now for power production out there. Build the power out there. Wind got a bad rap in Ontario. When it first came out, they were building it in farmers' fields, and, one farmer would get the wind turbine and get a lease check out of it and get $20,000 a year. And the other farmer wouldn't, and say, I got to look at this mm-hmm. thing. It's an eyesore. There's this little flicker from the light when the turbine goes around. And it really got, a lot of negative publicity. It's a healthy technology. It just was sort of the wrong way to implement it, opposed to, maybe give everyone in that community a benefit for having mm-hmm. that. So, for a while there, we saw a bunch of issues that came out of this adoption of clean energy, but they're really strategic in where they put them now. They make sure there's visual screens. They make sure they're not going to be an eyesore or discount people's property. Mm-hmm. So they're doing a better job of it, but that's any new industry, there's that evolution, and we've seen that evolution. Now we're taking a program. We're not even on government subsidies. The Clean Energy Fund has 82 assets on government subsidies, but anything that's expanded from now is all based on, hey, what can I sell power to a person that needs power for? Mm-hmm. So they're called power purchase agreements. So I'm going to build a 10 megawatt facility, and a Skyline Apartment REIT needs 10 megawatts of power. Now it's a business-to-business transaction saying, Skyline Apartment REIT, what do you pay for power? I pay 12 cents a kilowatt hour. Okay, we can build this facility, make a reasonable rate of return for 11 cents a kilowatt hour. Now let's go in an agreement for 20 years that will provide you power at a discount to market. That's good for your investor, good for our investor, and eliminates, government subsidies. So we're able to stand on our own 2 feet because we overspent during that period of time expanding renewable. We gained that knowledge, and now we're running with that knowledge, which is a fun place to be.
Yeah, no, it's great. Now let's turn our attention just back to the fund. So as an investor comes in, becomes an investor in the Clean Energy Fund. What will they see? What kind of cash flows will they see? What kind of returns are expected? What are some historical returns that current investors would have experienced?
Sure. Yeah, since inception, we've delivered about just over a 9% return. We target between 9 and 12%. We're not taking any risk with these contracts. So the assets we're buying are with, really creditworthy. We're not looking for these huge, risky assets that have, 25, 30% returns. We're not doing any development in the fund right now. We're really buying stable operating cash flows is
Yep.
what we're looking for. So we see typically returns between 9 and 12%. Last year, I think our annualized return was about 10%. And that's great for our unit holders. So, what we look to do is, really, low risk, low volatility product. We want to beat inflation. That's important for our unit holders. Our average unit holder is between 65 and 85. And they don't want the volatility, they don't want the risk. They want to know their money's growing. They're beating inflation, which is important, and that is continuing growing. So it's all equity growth. Because we don't make a distribution, it's a really tax efficient product. Because we reinvest in assets, we kick off the taxable consequence for the fund 8, 9, 10 years. So the only taxable consequence is when a unit holder sells a portion of the units or the units. There's capital gains at that period of time. But, we've set up a product that's going to continue to grow sustainably at around 9 to 12%. And we've typically seen that, and we continue to see that when we buy an asset, we buy on a discounted cash flow model. So we know what the cash will look like till end of life of the asset. And we're really comfortable with the stable growth of our unit value.
Yeah, so I think you made the comment that a lot of the investors are more the baby boomer, 65 to 85, as opposed to some of the equity investors who are 65, but they feel like they're 85.
Yeah, yeah, exactly.
So no cash flow. It's just you buy the units, you hold them. When you sell them, it's a capital gain, and compare
on a quarterly basis. We reevaluate our units, and since inception, we've had quarterly unit value increases. Right. And so, a unit holder will see growth through unit value growing. And so, we're not distributing yet. We'll get to a point where we generate more cash than we probably could spend. Yeah. And we have a distribution model worked out. And as soon as we hit that number, we may start making a small distribution. And then the rest will go to unit value growth. But right now, we have so many amazing opportunities. We saw this appetite actually when we started the fund. The 3 other REITs made distributions, but about 50% of our investors had set up for the dividend reinvestment plans, the DRIP. And so they were dripping it. So they said half of our investors were already dripping back into the funds. So when we this is a forced drip, we have a lot of investors come in saying, hey, we're investing, we're going to invest with you for a 3, 5+ year hold. We're comfortable with that money growing in a really tax efficient way. And if life happens and we need to redeem, no problem. We can manage the redemption in a really meaningful way. And they have to pay capital gains at that time. But it was a really clean way to sort of set up a product that was complementary to the Skyline REIT, because we're part of the Skyline family. If you're looking for a distribution that's important for your cash flow, maybe you have to go to one of the other Skyline products. But if you have a little bit of cash that you want to grow at a greater rate in a really tax efficient way, we're a great product for a lot of our unit holders there.
Or if you are an investor and you have a capital loss carry forward, this is a great way to get tax-free returns in a fund like this.
Yes.
Yeah, so I think that's a good.
We have a lot of business owners and Class F investors that come in as well, and they have a fairly good year and they want to sink a couple $100,000 in. It's a great way to sort of sink it in, watch it grow without the taxable consequence. So we see a lot of different reasons why people come into the fund.
Yeah, no, it's great. What do you think are the biggest risks for investors in this fund?
When the Ford government got in, they came and said, we're going to cancel all these really expensive clean energy assets. The contracts are just so solid that they basically have make whole provisions that we have to generate power for the provincial government for as long as our contract exists. So, one time I would have said the government was the biggest risk. But, last week, the Ford government came out and said, hey, we have a power problem. We have this huge demand coming up that we need to hit today. And so although the Ford government was probably the biggest naysayers of clean energy, they're probably our biggest advocates now We have about 5,000 megawatts of renewable energy in Ontario, and the Ford government need another 5,000 megawatts added, and then by 2034. And so, everything that we've just built over the last 15 years, it's been awesome. We have to double it in the next 10. And so it's an amazing place to be. Mm-hmm. And, the Liberal government in Ontario launched this program. So we knew we had their support, and the Conservatives got in. We thought, this might be a little bit of a blip for the clean energy space, but it wasn't. Their contract stayed solid, been good. Now the Conservative government are our biggest advocates to expand the market by double. So, that's been a positive. That was our biggest risk for us at one point. Now it's probably our biggest positive. In my honest opinion of risk for us is the asset manager, my team's ability to operate is the biggest risk. If we have an asset or a storm that comes through and stuff like that happens all the time and takes out a system, how quickly can we get that asset operating? Because our contract doesn't extend by the 3 months we're down. It's done at a fixed date. And so really our ability to perform is the most important thing. And we've assembled a great team with real boots on the ground. We have master electricians on staff. We have, real technicians that are on these sites every single day. And we do have assets that go down, and we have them quickly up as possible. Through my construction experience, we know what the biggest fail points on systems are. Usually it's the electrical infrastructure, like a transformer or an inverter. And so we spend a lot of money making sure we have spare parts and inventory to address any downtime issues. But I would say with any clean energy product, its yield will drastically depend on the ability to keep that system operational. Yeah. Just like a car, if you're doing oil, lube, and filter changes regularly, the car will generally be performing. And once in a while, that car will have something that goes wrong, brakes or tires or whatever, and you just have to make sure you're constantly maintaining it. So we have a strict process where we're operating assets. We want all our systems to have eyes on them and a full annual check before June, because that's really when we start making the most amount of money. And so we do our oil, lube, and filter changes in the spring and make sure these assets are fully ready to generate for the summer. So, generation, our ability to operate the assets is the biggest risk for the fund.
Yeah. Well, we personally made the shift to solar for our pool heating. And
congratulations.
A few years ago. And it's just, I remember the guy that, our pool guy, I said to him, I think we're putting in solar. And he said, well, solar heating for a pool is really good when you don't need it, because it doesn't, you can't save it for over time. Anyway, just wrapping up, any final thoughts on our discussion today?
Oh, and I just appreciate getting to know you a little bit better and what you're doing there. We have an appetite. A lot of our REITs we have 6,000 retail investors in Skyline, and that's 25 years of our founders really hitting the streets, going to introduce people, sitting at kitchen tables, getting to know Skyline product. And the next iteration is we want to continue to have those relationships with retail investors, but we also need relationships with people like you, Bob, that, talk in the Class F space and I space. And really for the next growth chapter of Skyline, we need more relationships with our advisors to know that we have a great product here. So, over the next little while, we're going to be spending some time trying to get on, all the major bank shelves. We want Skyline to be a household name, and that's really important for us because we know the value we've brought to our unit holders over the last 25 years, and we're really excited what we can do for our unit holders for the next 25 years. So we're looking for institutional investors, Class F investors, and our retail investors to continue to grow. So we're excited what we're doing, and we want to preach it from the hilltops there. So just appreciate the time there.
Yeah, well, I attended your talk at the Windermere House a couple of weeks ago, and it was interesting just talking to some of the investors, and the guy sat beside said, yeah, I've been investing with Skyline for the last 9 years. It's been really good, right? That's kind of what you want to hear. So,
I love it. Come to our Christmas party. We'll have 1,000 people at our Christmas party, and you'll hear stories like, I've invested since 25 years ago and I retired early because of it. And you're like, those are real stories. They're not just, marketing materials. There are people that have told us that. So it really, feels the well. What we do is hard. It's stressful, and it's a real honor managing people's money, but it's stressful. And so it's great hearing those stories when people are like, man, I did incredible with your product. You're like, that's awesome. So that's the kind of stuff we like, and we're going to continue to do it.
If you're building a portfolio, find great assets that you can tuck away and just kind of forget about, and check your statement once a quarter if you want to, but knowing that you're in good hands. So we appreciate you coming and joining us today. Before making any investment decisions, it is crucial to consult a professional financial advisor to determine suitability. Full disclaimers are available on privatedebtandequity.ca. Now, don't forget to follow us on your preferred podcast platform. Visit and subscribe to our YouTube channel to stay updated on new episodes. The YouTube channel is a great way to view the podcast, and from time to time, we can put graphics up there to support some of the information being delivered. We also provide our website visitors with a transcript for each episode. So if you like to read instead of watching or listening, you can do that as well. If you're eager to learn more about today's topic, visit our website or get in touch with us directly, and we're glad to answer any questions that you have. So closing, I'm Bob Simpson. It's been my pleasure to guide you through this enlightening conversation today. The world is changing, and for you to be successful in your investment activities, it's necessary for you to understand new trends and concepts. And I think today we've really covered off on a really new, interesting concept for you to consider. Remember, knowledge empowers you to make well-informed investment decisions. So until we meet again, stay focused and stay really disciplined on your financial journey. Thanks for joining us today.